trading has become quite popular in last couple of years. Some people make gains and others losses. Be it gains or losses, you have to report it to the income tax department. Some people do it under presumptive taxation, that is section 44 AD, and others file it as per their income tax slab rate. Section 44 AD falls in the grey zone. Hello, I am Aprajita from Mint Money, and today I have with me Naveen Wadhwa. He is Vice President at Taxmann, a tax consultancy firm. He will simplify Section 44 AD for us. Welcome, Mr. Wadhwa.
Thanks, Aprajita.
Thank you for joining us here today. First of all, tell us that what Section 44 AD is. What is presumptive taxation?
So 44 AD is one of those presumptive tax schemes. So we have got three presumptive tax schemes: 44 AD, 44 ADA, and 44 AE. So before getting into what this presumptive tax scheme talks about, let's understand why this scheme was introduced at the first time. So for small businesses, so we can connect it with the ease of doing business. So it's become really difficult and tiresome for these small businesses to maintain books of account, maintain all the documentary evidences, get them audited, and then file their return of income. So it was not just tiresome, as well as it was very costly compliances for them.
Okay.
So just to cut down these compliance costs and to ensure that small businesses focus more on their business than on the compliance part, so they introduced these three schemes. 44 ADA was introduced 3 or 4 years back.
Okay.
So I'll just give you a quick glimpse of all these presumptive tax schemes. All these schemes are for the resident taxpayers. 44 ADA, 44 AD is for those who are into businesses.
Right.
44 ADA is for the professionals, and 44 AE is for those businesses who are into transportation. So 44 ADA and 44 AE is not relevant for our discussion in today's podcast. 44 AD could be relevant, but I won't say still it is relevant for those who are getting into F&O transactions. But yet, let's have an introduction of 44 AD.
Right.
So 44 AD is a presumptive tax scheme for those who are into any kind of businesses.
Okay.
If you are a specified professional, you are a chartered accountant, lawyer, architect, doctor, you are not eligible for 44 AD.
Okay.
For that you have 44 AD. Again, if you are into any transportation business, 44 AD is not for you. Then if you are into any agency business or you're earning some commission income, 44 AD is not for you. So this is for those who cannot claim. Now let's talk about who can claim. 44 AD can be claimed by an individual, by an HUF, and by a partnership firm, not by the LLP. Though people consider a partnership and LLP are same, but yet 44 AD LLP is not eligible. And neither a company nor a trust, they cannot go for 44 AD. So this is clear. Now, I can be in any kind of business. I can do any trading of, not just the stock, I'm just talking about any brick and mortar business. If I am into that business, I can go for 44 AD presumptive tax scheme. Your turnover should be up to 2 CR.
Okay.
It should not exceed 2 CR. But in the last budget 2023, they have increased the limit to 3 CR for those whose revenue and expenditure should not exceed 95%.
Okay.
Or I would say in another way, your cash expenditure and cash receipt should not exceed 5%. That means 95% of your business receipts and 95% of your expenditure should be through the banking channels. It can be through credit card, debit card, UPI, net banking, anything of that sort.
Then it can go up to
Then
3.
you can go up to 3 CR. So in that situation, you can go for 44 AD. So if you are eligible 44 AD, then the next step is how much income is computed under section 44 AD. So the standard presumptive income is 8% of your turnover. It could be turnover or your gross receipt, depending on the type of business you are into.
Right.
So, but again, there is some additional advantage, and the government is pushing so hard for the digital transactions. So for all your digital transaction, the presumptive income would be 6%.
Right.
So this is an overview of presumptive tax scheme under section 44 AD.
Okay, just explain what is turnover in the context of 4480.
So for those who do not understand, those who not are commerce graduates, then you should try to understand what is revenue, what is profit. So revenue is your total gross receipt you receive in your business. Let's just take an example. You do selling of, let's say, some kind of textile material. in 1 lakh rupees. So that 1 lakh rupees is your turnover,
Okay.
right? And out of that, let's say your real profit is 10%. So 10,000 rupees is your net profit.
All
But turnover is your 1 crore, 1 lakh.
1 lakh rupees.
So, though it's very grey area, and surprisingly, we do not have any guidance under the Income Tax Act on how to compute the turnover or the gross receipts. So, because if I am a chartered accountant, I am giving some services, so I won't receive turnover, I would receive gross receipts. So that's why they, the 44 AD or any other section like 44 AA or AB, which talks about the books of accounts and the audit, they use both terms simultaneously, the gross turnover and the gross receipts.
Okay.
Right? So, for that purpose, we have got one guidance note issued by the ICI, wherein they have covered various scenarios on how to compute the gross turnover and the gross receipt. So, you have to go through that guidance note to understand, and it depends on the kind of business you are into to really calculate your turnover or the gross receipt.
Okay, and now the real question, that why Section 44 AD is being seen as a grey zone when it comes to F&O income. Yeah.
44 AD is quite popular scheme for the small businesses. But we need to understand, as I mentioned earlier, why it was introduced. It was introduced for the small businesses, and for those, they do not want to get into any kind of hassle to maintain proper books of account and compute the real profit.
Correct.
So that's why they have given the presumptive percentage. Using that, you can compute your taxable income. But when we compare it with the F&O trading, so your profit is by default computed by your broker.
Correct.
So you get into a F&O transaction, when you sell it, your real profit or loss is computed by default by your broker, and you just look at your contract note and you just log into your account, you can actually see your real profit. So the main objective is not met. So when I go for F&O trading into 44 AD, or again in 44 AD, and why the government has come up with 8% threshold limit, because they have studied a lot of businesses and they have tried to find out, and in fact you can see around, generally the net profit for the small businesses ranges between 5 to 10%. They do not earn more than that. But in case of F&O trading, I have seen people losing 100% of their money the same day. At the same time, earning more than 200% the same day.
Right.
So for that reason, this is not for those who are getting into F&O transaction.
Right.
And I again reiterate, since the 44 AD was meant for those who cannot compute the real profit.
Yes.
But in case of F&O, it can be computed, rather it is computed automatically. Even you don't need to compute your real profit and loss. That is computed by your broker.
Right.
So
why 44
there can be two school of thoughts. Some professional may disagree with me, but I am firm on this point that it would be little riskier for you if you claim 44 AD benefit on your F&O transaction.
And I believe Income Tax Department has already started sending out notices wherever they have found out that there is discrepancy.
Though I am personally not aware about any such notices, but definitely if we can think that way, that F&O trading can't be covered in 44 AD, the department would definitely go in the same way.
Correct. And if you can explain that why people go for 44 AD in F&O income, what's the difference?
I would
the
say,
tax benefit that people do get when they opt for 44
so
AD.
if I am firm on my opinion, so I would say bad advisory.
Okay.
Because your notional income is 8% of your turnover, but your real income could be much higher than that.
And it's all digital, then 6%.
And again, it's
even lesser.
That's 6%.
Right.
So if I have to reduce my taxable income, I have to claim some additional refund. So some people may go that way, that I'll show my income under Section 44 AD, show lesser profit and claim a refund of all the taxes I have paid, or if there was no TDS or advance tax, I'll pay lesser taxes. So the ultimate objective is to cut down my tax expenses.
And if 1 year they may have opted for 44 AD and next year they incur losses, then what to do? They will have to go for it,
if
or
you have to going for 44 AD, then the next year you have to pay the taxes.
yes.
Even if there are real losses.
And that's something not many people are aware of, that 1 year you have opted for 44 AD to save taxes, but next year if luck doesn't favor you and you do incur losses, then again you will have to pay, because turnover also factors in losses also. Then 6% of whatever your turnover is, this will be your profitable income, and they will have
In
to...
fact, I would highlight some of the points, some of the court rulings, not of the F&O trading, but the courts have given weightage to the uniformity in the treatment you have given to your transaction over the year.
Okay.
You can't keep switching from one scheme to another scheme or one methodology to another methodology. So just giving an example. So I keep investing in the shares, just taking an example. So the capital gains or business income, there can be two kind of my earning from share trading. I'm talking about pure share trading, not F&O trading. My business income, if it is considered business income, I can claim certain expenses.
Okay.
The depreciation of my car, the depreciation of my computer, the internet bill, I can claim a lot of expenses. But when it comes to the capital gain, while calculating the capital gain, I just reduce the cost of acquisition, right? And nothing else. I accept the expenditure which are directly related to the transactions. So you can see the capital gain are taxable at low rate. Business income could be taxable at a higher rate depending on my slab rate. So what people do, they keep switching. From in 1 year, I'll consider as business income. In the next year, I'll consider as my capital gain.
Okay.
So it depends on the on which side of the table I'm standing on. If in current year I have incurred losses, so I'll go for business income, and I'll also claim some expenditure and increase my losses. But in another year, I incurred capital gain, and those are long-term capital gain. I held them for more than say 65 days. I'll claim it as a long-term capital gain. Up to 1 lakh would be free. After that, it will be taxable at 10%. And stop such kind of changing your stance. The CBDT, not just CBDT, the courts have issued at multiple times. They have said it. They have given certain guidelines on how you can classify your transaction into business income or into capital gains. In the year 1989, they have issued an instruction, and in 2006, they have issued another circular, and in I think 2017, they have issued another circular, wherein they have clarified how and when you can classify your transaction to business income or the capital gain. But those instruction and guidelines, they have considered one common point: whatever stand you take, it should be followed uniformly over the subsequent.
Consistency is needed.
Consistency is important.
Correct. So what is the ideal way out to file F&O, taxation on F&O income? Under which head, under which form?
As I mentioned, there are... For those who do not understand taxation, I think we should talk about first what are the heads of income.
Right.
So in income tax, your all income are computed into 5 heads of income. Salary income, house property income, income from house property, PGP, profit and gain from business and profession, capital gain and other sources.
Right.
So for F&O trading, there can be 3 possible heads of income.
Okay.
PGBP, capital gain and other sources. Right? So in other sources, we include only those income which cannot be taxable under the remaining 4 heads. So that's why other sources is also out of discussion.
Right.
So now we have got just 2 heads, PGBP and the capital gains. Some people believe a derivative, my call and put option is my capital asset. So it should be taxable as capital gain. So but we have got section 43, wherein they have defined the derivative transaction and F&O transaction fall within section 43 subsection 5.
Okay.
So because of that, it should not be taxable as capital gains. It should be taxable as PGBP, as your business income. Business income or business losses. That's number 1. Within the business income, we have got 2 further sub-classification: speculative business and non-speculative business. And why this classification has been done? So I would say to demotivate the speculative transaction could be one of the reasons. But the another reason is the tax treatment is same, the tax rate is same, but it is different on 2 parameters. One is your speculative losses cannot be set off with non-speculative.
Right.
First. Number 2, your speculative losses can be carried forward for 8 years.
Okay.
Unlike non-speculative losses which can be carried forward for 8 years.
Okay.
I repeat it, for speculative for 4 years and non-speculative for 8 years. So these are basic 2 differences between speculative and non-speculative, but yet both the transactions would be taxable under the head of PGBP. So when I say taxable, the losses are also considered as taxable, but we call it, technically we call it taxable, but actually these are losses, you don't need to pay any taxes, but you have to disclose it in your right year to carry it forward and to set off it with any other taxable income.
Right.
That is clear. Now coming to the main point, whether derivative transaction is speculative or non-speculative.
Right.
So there is no controversy at all. If you say it is covered under business income, it would be taken as non-speculative income.
Okay.
Why it's a non-speculative income? Again, 43 subsection 5 has got sufficient guidance on it. It says any kind of derivative transaction to hedge your risk should be considered as non-speculative transaction. So it means all the F&O transactions
are non-speculative,
be it in the shares or in the commodities. They both are non-speculative.
Okay, and what about intraday gains or losses?
So intraday would be considered as your business gain or business losses.
Okay.
They should not be considered. Again, the circular I just mentioned about, I think circular 16/2017, which talk about your intraday transaction will always be considered as your business income or business losses.
Okay.
One. Number two, it would be considered as speculative speculative losses.
Okay.
So intraday transaction will never ever taxable under the head of capital gain.
All right. Okay, and now if people have opted for 44 AD, they have already done it. Now, what are some corrective measures that they can take it? What may happen with them? So
if department finds out that the 44 AD claim you have taken for the F&O transaction and that is not tenable, and they may issue a show cause notice to explain why you have considered it, and if your real profit is much higher than that, so you may undergo the scrutiny assessment, and whatever lesser income you have reported in your ITR, it could be considered the under-reporting of income or misreporting of income.
Okay.
So in both the situations, the income would be taxable, interest would be levied, and a penalty could be levied, which can go from 50% to 200% of
100% also.
So that's why if you believe your real profits are much higher than the presumptive profit, my advice would be file your revised return of income.
Okay.
And the last date is 31st December 2023. Offer your real profit, and if you do that, there would be just some additional interest amount and the real tax you need to pay, and you can avoid yourself from any kind of penalty proceedings by the department.
Okay, so for FY24, if people have already paid some advance tax as per section 44 AD, then they should file a revised return before 31st December?
No. I am talking about the last year.
Okay,
FY22-23.
Okay.
For that, you must have already filed your return of income either by 31st July or by 31st October.
Okay, yes. So for FY23 revised.
The 31st December is the last day to revise your return, and you can file your revised return. And for the ongoing financial year in taxation, we call it previous year. The previous year, 2023 and 24, the advance taxes, as you mentioned, they are paid in 4 installments. 15th June, 15th September, 15th December and 15th March. So you must have paid your 2 installments of your advance tax. So my suggestion is, if you have considered the presumptive income, and so you need to recompute your income and now pay the advance tax, because for presumptive income, they can deposit their advance tax in 1 installment, that is the last installment. Before 31st March, they can pay the entire advance tax. But for presumptive income, for non-presumptive income, and if your tax liability exceeds 10,000 rupees, then you have to pay your advance tax in 4 installments.
Okay. And lastly, about small businesses, for whom the very reason why 44 AD did come in. But if they are also under-reporting their profits, and in some way they may profit, or they may have some idea about their profits, actual profit, and if they calculate if it's more than 6 or 8% of the turnover, then should they also file it under ITR 3 and other business income, or they are in the safe zone? Because I hear that even small businesses misuse this.
I won't say small, because they are entitled to use it.
Exactly. It is meant for them.
I am eligible.
But if they are under-reporting, then
But you can't be under-reporting. The Income Tax Act has given you an option to compute your income on presumptive basis. If I am an eligible person, I didn't manipulate any of the facts. If I know my turnover, and how I know my turnover? Whatever amount I receive through digital transaction. So these small businesses, they have got the QR UPI QR codes. Whatever amount I receive, majority of them I get it in my business, and all the cash payment. Let's say I make a note of it, I can compute my turnover, but I do not keep a track of all the expenditure I make. So in that case, I can compute the presumptive income on my turnover. So if the percentage is not going to vary much, so I would say you are in the safe zone. But let's say you're doing some kind of manufacturing and your gross profit is 70%. So in that situation, you're not in a safe zone. Department may question you. They may ask you to submit your bank statement and they can try to find out your real profit because technically, legally, you're not liable to maintain your books of account, and they can't ask you to submit your books of account for scrutiny. So in that situation, they can, as far as they can go for the bank statement. And I know that's a gray area and that is a litigatory point. And I have seen department issuing notice in such cases. But ultimately, these people get the relief if their turnover is below 2 CR or 3 CR from the current.
Okay. Thank you so much, Mr. Wadhwa, for sharing your views with us and really simplifying 44 AD for us. Section 44 AD is meant for small businesses who cannot compute their actual profits. But if you are very well in position to compute your actual profits, then don't go for Section 44 AD. It's in the grey zone. Our income tax department might chase you if you underreport your F&O income or any other business income. Thank you.